Okay, welcome everybody. How are y'all doing? It's another Monday, and we are live with the Monday night webinar at Israel Keys Wealth Academy. Get to see everybody. Just going to give a second for y'all to filter in, and feel free to share the video with the other students. And if you're not a part of the Wealth Academy, you just stumbled onto this on YouTube, you're welcome as well. It's a free session. Feel free to come in and enjoy the spoils of what we're going to do tonight. And so, real quick, we're just going to get this on the show on the road tonight, real quick. I've got Tope with me in the studio, well, the virtual studio. This is the first time we're doing the Monday night. First time we're doing the Monday night webinars live on YouTube. We've been tinkering with some of the technology. We think we have it ready to go. We're looking forward to taking things to the next level. And we're sure that it's going to be an exciting ride. So I'm going to put Tope on. He's going to teach, or he's going to lay a foundation tonight as part of the Beginners Mentorship Program. Tonight, we're dealing with order blocks and what we call institutional sponsorships. To make this make sense, after you're done tonight, if you haven't already, you want to go into the channel already and look at some of the other videos on the Beginners Mentorship. There's an entire playlist there. Also, I was on yesterday night talking about the foundations of what we call the market maker philosophy. So when we keep talking about market makers and all these kinds of things, there's a reason behind it. And I began to lay some of that foundation yesterday. But talk about over to you. Get this show on the road. And then at the end, for those of you who can stick it out, if you can stick through the teaching session, it's going to be about 30, 35, maximum 40 minutes, if that. We are going to do some live analysis for the week coming up together. So we're going to show you how we interpret the markets practically in advance of the week and what we see happening based on what's already happened on Monday. Tope, are you there?
Yes,
All
hello
right, over to
everybody.
you. Take the show over.
Yeah, hello Israel. Thank you very much for having me. Hello everybody. Trust you're all doing well. It's another exciting time to be alive. We are all excited to be. I hope you've been keeping safe. So, without further ado, introducing myself, like Israel's done. My name is Tope, and I'm one of the partners in this amazing community. And we trade. We are here to help people understand how to better trade and be profitable, discipline, and all those good stuff. So we've been doing this for a while now, and this is going to be another session today. Hope you all are going to have a good time, and we're going to shed some more light into how trading could be and how the market works. Okay. So tonight we're going to be covering something called order blocks and institutional sponsorship. Okay, order blocks and institutional sponsorship. So I'm just going to clear my screen. I think I'll start by just giving a simple, small definition, and the kind of definition I'm going to give is one that I don't want to use any industry jargon. I want to, say it in such a way that you would remember. Okay. So first thing first, what's an order block? So
Tope,
in the,
Tope, real quick. Is it okay to take your volume up a little bit, Tope?
okay, yes, we can do that. 2 seconds. How about now? Is it better now? Is the volume a bit better now? Okay. All right. So the simple way I'm going to define order blocks or institutional sponsorship would just be talking about initially I'll talk about the
Volume's
TV.
good.
Oh, awesome. I'll talk about the TV you have in your house. Okay. The TV you have in your house. I'll talk about wholesale and retail and all that stuff. So let's imagine you got this amazing TV, for Christmas, and you got it at a very, very good price. Everyone that came to your house, they're looking at this 80-inch screen TV, HD, whatever is better than HD. It is curved, it's voice activated, it can toast, it can toast bread for you and do all this amazing stuff. And then you realize that a lot of your friends like the look of this TV, and before you know it, you realize that hold on a minute, there's demand for this. Okay, there's demand for this, and you bought it off, the normal high street shop. You bought it for like maybe 2 grand or 4 grand, whatever it is. And since you didn't realize that a lot of your friends are demanding for this product, you then decide to do your research and find out, okay, how did August get this TV? This TV is selling like hotcake. I feel I can sell this myself. I feel I can make some profit out of this. So you decided to investigate and do your research and found out it was produced in maybe China or Hong Kong, by a particular factory. This factory would call it the order block. Okay, the factory will be the order block. This is the original place where the TV came from. Okay, so let's just assume this place is a factory, this house. Okay, this house I drew here. So you found out that they bought this TV for dirt cheap in Guangzhou. Maybe they bought it for $500, and they came to sell it in the UK for £4,000. That's an amazing profit. Once you realize that, all you then do now, when all your friends are going crazy, buying this thing every Christmas, you know where to go get it from. You go get it from this factory in Guangzhou. So this factory will be called the order block, like I said. Remember, it will be called the order block. This is the origin. This is where it goes down. This is where the manufacturing takes place. This is where you can go get it at wholesale cheap prices. Okay, you buy it there and then you sell it to people at premium prices. So your price that you got it is at the bottom here. Let's just assume you're getting it for 200 quid, and then you end up selling it. You're selling it for, you want to be competitive. You didn't want to sell it like Argos is doing, but you're selling it for. So you bought it for 500, and then you're gonna be selling it at every period in time. So maybe you bought in January. In January you sold it for 1,005, 1,5. Okay, the optimum price of this product is up to like £4,000. That's the max it can go. All the high street stores, they sell it for £4,000. So that's the maximum you could sell it. But along the way, in January you can sell it for 1,005, and then if you wait again to around Easter, you can sell it for 2,500, and then when you wait till summer, the price might come down a bit, to maybe 1,000, 1,700, but you're holding on to Christmas time, where everybody's going to be going crazy, Black Friday and all that stuff, and then till you finally sell it for £4,000. You're out of stock, then you return back to the order block, the factory, to get your product for 500 quid again and repeat the process. Okay, this is exactly what the banks do, the market makers do. Okay, this is exactly the market makers that Israel was talking about in the last session. This is what they do. So they know that the highest point that they're going to be going on a particular instrument is at X price. So let's just assume at 147,350. That's the highest point. Okay, that they will be selling this product. They know it's going there. They know that price is going there. At this point here, they will have done a lot of business. Okay, they will have done a lot of business. But remember, you are this very interesting guy, meticulous. You've done your research and you found out that this is where the order block is. This is where the institutions are. This is where they do all the manufacturing. This is where you can get a product at wholesale price, and then you sell along the way up to the optimum price at retail price. Okay. So we want to be here. That's where we want to be. Okay. And tonight, I'm just going to be showing you how to identify where you can get currencies for, if we can use the analogy, where you can buy each instrument for wholesale prices and end up selling them at retail prices, making handsome profits. Okay, you can imagine if you bought something for 500 and you sold it for 4,000 at the end of the day. But along the way, you're selling it along the year, through the seasons and the month and everything. You're selling for different prices. So you're making good profit. You're not losing. This is what the market does. So tonight we're just going to be looking on, how to identify this. Um, Let me use this word, order blocks. Remember, it is the manufacturer. This is where you get it for wholesale prices, okay? And it's the same way you identify, where the banks have done a lot of business, okay? That's what I'm going to be showing you. I hope this simple analogy. I hope you understand this simple analogy. If you don't, please pop up a question in the group. That'll be very very good. Okay, right. Moving forward, let us clean this chart up and let us start to delve in to identifying order blocks. Okay, so if you're then looking at a chart now, if you're looking at a chart, if you're looking at a chart, how do you identify order blocks? How do you identify institutional sponsorship? So let me use this join as an example. So we'll use bearish. We'll identify bearish order blocks first. So let's just assume these are candlesticks. For the past few days or few months or few weeks or few hours, the price has been going up aggressively. Okay. Now, if it's going up aggressively, there's always a point where price started that move from, where you see a really crazy move that is, not as normal as every other move you've seen previously. So you probably would have seen candles, quite small in size and, you know, um, dotted everywhere, no particular decision made. Then all of a sudden, boom, you see, an abnormally big candle. That is what we call institutional sponsorship. You and I can never move the market in that way. Okay. So let me do this quickly. Let's paint this red. So now this is how to identify a bullish order block. For every bullish order block, in later days, we're going to be talking about, the theory behind it. Anyway, we did an example of giving you. I think you should be able to get it. So for you, as a businessman, to sell these amazing TVs to people, you first need to buy it for yourself. That is why before you see a bullish run up, okay, in identifying the order blocks, okay, before you see this bullish run up, they bought it, okay. That's why you see a red candle. So there's a lot of selling going on. They're selling to the wholesalers here, okay. So once that is taking place and you see this move out very aggressive past all these other candles, the price is moving up aggressively this way. That is that is institutional sponsorship. Now, where is the order block? The order block, remember the warehouse, that amazing warehouse where all the TVs are made, and they sell it dirt cheap at the bottom here for $500. In a bullish run, the order block is always represented by an opposite colored candle. So if it's bullish, assuming your chart, your bullish candles are green or they are blue or they're white. The bearish, I mean the order block is going to be the opposite of that move. Okay, why? Because they have to sell. The manufacturers are selling to the wholesalers over here. They're selling to the wholesalers. The wholesalers are grabbing all the orders. They're buying the 200 or the 5,000 worth of stock because they know they want to end up selling it to everybody and everyone. Okay. So they will be doing a lot of buying over here. So the wholesalers will buy, they'll be buying, but what you see is going to be a red candle. Why? Because they are being sold to. Okay. They're being sold to. They're being sold to by the manufacturer. Okay, I'm using this analogy so you can have a very clear understanding. Okay, they're being sold to by the manufacturer. Manufacturer. Okay, so they take all the orders. They take they take all the orders here, and make sure this chart don't skip forward. Okay, so they take all the orders here and process it and sell it to the wholesalers. Now the wholesalers, they have the stock. They have the stock of this TV. And then what happened when they now move away from there to speak to the retailers and on their website and all that, they start putting their own profit on the TV, and they start selling it. They start selling it at different periods, at different times of the year, or different times in the week, or different times in the month, whatever it is. And as there's more people looking for the TV, the price will be going up. Okay, because there's a lot of demand. Okay, there's demand for this TV. This TV can, walk your dog. It can, feed your goldfish. It's an amazing TV. Okay, apart from what you see there, the clarity and all that, the sound system amazing. But this TV, everybody's demanding for this TV, and that is why this TV, they will be able to sell it for different price points, but it must be with profit. Okay, it must be with profit. So now you being another intelligent wholesaler, that you've maybe come to know about this TV, you saw them selling, everybody's going crazy and they're buying along the way. Then you tell yourself, hold on a minute, I know where they manufacture this TV. I've actually seen it before. You've done your research. So you would not be buying at any point here when the price is 1,000, when the price is 2,000, when the price is 3,000, and even when it gets to the highest point of £4,000, you wouldn't be buying it there because you know for a fact that, hold on a minute, I know the manufacturer, I know the factory where I can get this for dirt cheap. So what do? You wait, you wait for that season when price starts to drop. Okay, the price of the TV start to drop again. Maybe around summertime it drop in summer. It's coming down. It's coming down. You know what you're doing. You're simply waiting for the right price point. So when it's coming down, we assume it's the red candles on your chart now. Okay, is the red candle on your chart. So price starts dropping, all you just do is you wait. You don't buy it when it drops to 2,000. You don't buy it when it drops to 1,007. You don't buy it when it drops to £1,000. You don't buy it when it drops to £700 because you know, in fact, that the actual price of this television is £500. Simple. So you wait. This is how you get into amazing, amazing trades. You wait till when you wait till price reaches order block. Okay, you wait till price drops down to the order block, and then you come in nicely using the patterns that we're going to be showing you, using the strategies that we're going to be showing you, the entry techniques we're going to be showing you, and everything that we've taught you previously, market structure break, and all that stuff. You then use that to enter into the trade, okay, at that level. So let's clear this up. Let me clear this up. Okay. So what you do, you wait for price to drop to this level where they got the cost of the actual cost of the product is. You wait for price to drop there, and then this way you then come into the market like an intelligent wholesaler. You also come to buy. Okay, you buy. This is where the big boys will buy it. If this is where the big boys are buying this TV and are making amazing profit, that's where you should also buy it and make amazing profit. So from here, there should be another boom in the price. Okay, price should move off away because that is the lowest price point. Okay, that's the lowest price point, and then price moves off again. So now bear in mind that all of these moves that is happening in relation to this TV, I'm just going to stick to TV for now. In relation to this TV, at different points in the year or in the years, so new technology comes and that TV becomes old TV. Okay, that origin, this buy point where the price is going for 500 £500, this point that is £500, one day you find out because they've now made a new TV, this one doesn't just walk your dog. Okay, this one actually could take your kids to the playground. Okay, it could sing them a lullaby to bed and all that. Because of that, the price of this TV we're talking about drops way past below the £500 level. Okay. Once that happens, they're trying to tell you that hold on a minute, the market has changed. Okay. We are not going to be selling at this price again. Everybody, even the demand for this product now is now dropping. The people who bought it before, they're now giving it, throwing it away. They're giving it to their grandparents and all that stuff. So now this TV now, people are not looking to buy it for 500 again. You now auction it on Gumtree even for um 300 quid and 400 quid, and people are still not buying it. You're begging them. Then the price keeps plummeting. And as the price is plummeting, you again, as a smart business person, you realize that hold on a minute, what price point did they start dropping crazily? Okay. This leads me to the next one, how to identify a bearish order block. So this this point here, okay, let me link it back um to the chart. This point here, the red candle before this this blue candle run up, okay, this candle run up. That red candle before the run up, that is the bullish order block. Okay. So I let me say buy, always buy at bullish order block. Okay. Another short name you can call it is OB. Okay. So this red candle before the run up of all the blue candle is a bullish order block. Okay. Now this blue candle before the rundown of all this red candle is the bearish order block. So just think opposite, okay? Is a bearish order block. Bearish order block. You must always sell at the bearish order block and buy at the bullish order block. Always and always. Now you will always see order blocks at different time frames on the monthly, on the weekly, on the daily, even up to a 1 minute time frame. But order blocks, they're not all the same. Okay, they are different levels. The higher the time frame, the stronger the order block. Okay, the lower the time frame, the weaker the order block. Okay, so it's like you're going to meet a manufacturer who can just make 10 TVs per day, and then you're going to meet another manufacturer who can do 10,000 TVs per day. So one is stronger than the other. One is more organized than the other. One has a financial strength more than the other. So you can qualify them that way as well by looking at, how quick did price move away from that point. Number one, help you to qualify the strength of that order block, or yeah, how quick it moves away from that point. How aggressive did price move away from it, and how far did price travel? How far did price travel away from the point where it initially started moving? I also call it origin. So point of origin. So what is the origin of the price move in the north direction or the south direction? that will be the point where you're identifying, okay, this is my bullish order block, or this is my bearish order block. Okay. So I hope you guys are getting this. Let us now move to the chart quickly. Once you see it, you can never stop seeing it. Trust me. Okay, let's clean up the charts and boom. Okay, this is the weekly time frame. Actually, you can use any time frame that you want. We can use daily. I think daily and H4 is my favorite. I think it's also Israel's favorite time frame. um. Okay, so let us go back to our television scenario. Okay, let's go to our TV scenario. Okay, so the price of the TV, the price of the TV was, let's just say, 121920 at this point. So, guys, can you see? Do you agree with me that there's a red candle here? Okay, let me make that. Can you see this candle? The red candle. Let me zoom in. Let me zoom in for you. The red candle before the white candle. So the red is the bearish, while the white candles are the bullish candles. So before this push up, you can see that this move up is quite unlike any other move up for the past 10 candles. Okay, 4 times 10, 40 hours. They've not moved price in such a way. Okay, this this move this move is institutional sponsorship. Okay, this move up. You can tell that that move is aggressive, is moving away out of this point. So they've gone to buy all the TVs here, and they're now ready to sell to everybody. They're selling to everybody. And then, boom, the price moves up as it's selling. And then they waited again for, and then you, the interested, the intelligent business person, you waited for when price is going to fall back to the point of origin. Okay. But when we're going on the charts, when we're looking at point of origins, we always like to find the one that has the most activity. So it will be the body of the candle. Which body of the candle, which bearish body of the candle is quite beefy, is bigger than, is the biggest in this area of origin? Would you agree with me that it's not this, not that, not the spiky candle, neither is that, but this candle? This is where they've done a lot of business. That's why it's very thick. So you mark your your chart with this rectangle. You mark that origin and you draw it out, and you simply wait for price to drop. You wait for price to drop to that level. You wait for price to drop to that level. You wait for price to drop to that level. And then once price gets to that level, you'll be looking to buy. Once you buy as well over here, then you can become that profitable businessman and you start selling it out to people over a period of time. And as you can see, it's not just going up straight away, it comes down a little bit, goes up. So we can call this point maybe Black Friday. The price became cheap, and they guess where it went back to? Look at this point again. It went to what point? Can you type it? What would you call this? Red candle before that, bullish candle. What is that? What is that? That is a bullish order block. So they're selling it to the wholesalers here again, and boom, they start to sell it out. They start to sell it out. Yes, you're looking for discount. Exactly. So this point here is a discount price. You wait for price to fall to the discount price, and then you do your business there, and off you go. And at every point in time, there are different discount points. The point where price moves up aggressively, for bullish. So this point over here, so all of this, which one has got the biggest body? So this the second bearish candle there has got the biggest body. So we use that, and if you draw that out in time, price came there and off it went. And remember, like I said, over a period of time, some of you economists would have heard this time before, law of diminishing return. So you start to feel, oh man, this TV is too old. I don't like it anymore. So you don't want to buy it. And people don't want to buy it. And there's a new TV, the one that actually sings people to bed and, that can, do you dinner before you go to bed and breakfast in the morning and all that. This TV is amazing. So they're leaving your TV now and they're going to buy another one. Then the price start to plummet. And as the price start to plummet, then you start to see a different kind of um, origin, point of origin, or discount prices. So once this area, which is meant to be the bearish or the bullish order block, once price trades through it and breaks structure, then we know prices are going now. So everybody must start selling. So you are the businessman now. You leave this business of selling TV and you're moving on to the next big thing. Okay, cryptocurrencies. So you're selling all your TVs out to people. You're selling it out. Month one, the price drop. Month two, price drop. Month three, price drops. And then someone who knows that, no, I'm me too. I want to, I'm not gonna buy this. This TV is too expensive. I'm just gonna wait so I can do business again. They will buy it back from you at the bottom here, and then maybe they sell it out again. So there's some sort of price point over here that they're looking at as well, and they'll be like, okay, if it gets there, we're gonna buy it. And then, but you can see prices coming down. It doesn't move straight. Price never moves straight. So all of this market structure break. Once the market structure breaks, then okay, we're gonna return to a price point that cost a break. Let me clean the chart. It's looking too dirty now. So this bearish candle. So now this how to identify the bearish order block. It is going to be the bullish candle before the bearish rundown. There's another one here. The bullish candle. This bullish candle. This one. That bullish candle before the bearish rundown. Okay. Bullish candle before the bearish rundown. Bullish candle before the bearish rundown. Bull, bullish candle before the bearish rundown. So here's another one over here. Okay. And as we go along, I will be showing you, all these other price points, order blocks that the price did not, that they didn't do any business at. Just a little, just a little bit of transaction took place, and that price was taken out. That price level still matters on the reverse. We leave that for another session. But today is all about identifying order blocks. Let me clean the chart again, okay? Let me clean the chart again and just show you another pair. Let's go to USDCHF, and this happens on every time frame. So let's look at monthly, for example. Monthly. This is a monthly. When you see a rally, a drop down, there's always points where you see an opposite candle. So the first point that we saw that was this level here. You draw it out in time. There should be some business that will take place when price gets there. There's another point here again, a bearish candle before, a bullish candle before a bearish drop. You draw that out in time. So look, boom, drop, drop. So it first drop, it returned into it here. This was the first huge drop, and then price started going up again. So for it to be going up, there's a bearish candle before the bullish one. This candle becomes our origin or order block. Okay, that's where the order block is. It becomes the order block, and then this this happens, across all the time frames. So you can see it on the weekly, on the monthly, on the daily, on the H1, you know, whatever time frame you're looking at. Okay. So this is the week. Let's go to the daily time frame. This is the daily time frame. As you can see, there's a rally up. Look at this big move here. So I'm sure this TV was amazing. You went to buy it and was selling to everybody, and then you wait. You're waiting. Now, I'm not gonna buy this TV until it gets to this level. So you were able to buy this TV back a day after. So each one of these candles is one day. Okay, each one of these candles is a day. So after day one, that price pushed out of this zone, you identify that that area is a very good area to buy if price returns to it. And guess what? Price returned to it the following day. The following day, you had two opportunities to get in at these two candles over here. And once it happened, boom, you started to enjoy the ride with everybody. And look at how far price went from there. That would be a handsome 557 pips, or you can call that £5,000 profit from a £500 TV. Okay, so at the end of the day, so if you made £5,000 from 500, so it means you've made times 10 of your initial investment. Okay, so as we go along on the chart, you just spot all this order blocks or institutional sponsorship. You can see another one here. This is an aggressive move down. There is a bullish candle before that. You identify it, draw it out in time, and then you see price came back the second day itself, went into it, and price dropped. Okay, and then price kind of struggled to move back up. When you see price, having a lot of spike, not moving aggressive. Look, this is an aggressive move. This move here is an aggressive move. This is an aggressive move. This is an aggressive move. This move up here is an aggressive move. Those kind of moves are what tells you the strength of a level. Okay, look at this move down as an aggressive move. So you mark out the origin before the sell. Aggressive move. Look, that's aggressive. And then as you go on lower time frame, you see some other levels within the level, but I don't want to complicate things for now with that. So, but just bear in mind that price is fractal. So whatever we show you on the daily or on the monthly or the weekly, it's the same thing on lower time frame. Okay. So you can see aggressive move up from this level. You mark this candle out, and you can see price came back one, two, three, four times, moved up. But once you see that price is moving, they want to move past this bearish order block, and they couldn't do it, is telling you that no, the price of this TV has to come down. We cannot. People are not willing to buy this TV at £5,000 anymore. They're saying a new TV has come out now. Okay, the one that can wash your car. So they don't want this one that just does a dog walking. Okay, so now then the price starts to plummet, and as the price starts to plummet, we start to see newer levels. They start to create newer levels of opportunity. Okay, aggressive move down, return the second day drop. Aggressive move down, you draw that out. Did they return to it on this candle? Let's see. Yes, they returned to it 8 days after. Another aggressive move down. They returned to it after it 7 days after. So are we gonna get another aggressive move down? If we see if today closes below yesterday aggressively, we can mark this out and see what price would do. Mark that candle. So the thickest candle there. I will go with the thickest candle because that's where all the trading activity took place. And then we'll anticipate that they're going to be coming back tomorrow, a day after, or Wednesday, come back to that level and then drop further down. Okay. So, in a nutshell, to let me refresh again. A bearish order block is the red candle, sorry, is the green candle before the series of red candles. So Let me draw that out again. So for bearish, so we're assuming price is dropping all the way. So it's dropping. The bearish order block is the bullish candle right before the main drop. The bullish candle. So let me paint this green. Okay, will be this green candle before this red candle. Okay, this will be our bullish order block. So now it is going to be called OB. Okay, wherever you see OB, you know it's order block. Okay, and then so it will be this green candle, and then wherever you see, for you to identify, so this is going to be a, sorry, wrong, mixed it up. This is a bearish order block. Sorry, not a bullish order block. It's the opposite. So this is a bearish order block. Let me paint it red to let you know that's where you're gonna sell. Okay, that's a bearish order block. Now, in the same way, to identify a bullish order block, it is going to be the green candle. It's going to be the red candle. Sorry, before the series of green candles. Green candles. Let me just do this twice. Okay, then you see series of green candles moving away, moving away. So the bearish candle before the series of bullish candle is the bullish order block. I'm gonna paint that green, green for cha-ching money, dollar sign. So this is a bullish order block. Let's paint this green. So before you have a series of green candles going up, the red candle, the beefiest red candle before that move is the bullish order block. The bearish order block is the green candle before a series of red candles dropping down. Okay. Once you're able to identify this, it will also help you find good entry points. So remember, I said these points are the discount prices. These points are the point whereby you go back to the manufacturer and you get the product dirt cheap, and then you can sell it off at, for premium prices, making a lot of profit. So if you wait for price to get to your bearish order block before you sell, or your bullish order block before you buy, you're likely to make more profit in your business, in your trading business. Okay. Okay, so I hope you've been able to understand that. Is there any questions, anybody? I hope you're clear. Okay. Alrighty, you're right.
Tucker, there's a slight delay in between the studio and YouTube, so they probably will hear you roughly 30 seconds after you ask the question. So let's give them a little bit of time just in case somebody does have a question.
I figured. Okay. If there is no question, I think I can hand it over to Israel now. It looks, when students don't ask question, it means two things. It means they understand what you're teaching, or they don't get it.
I'm sure they get it from looking at some of the comments in the comment section as well. And for some of you who have seen the signals, the calls, the analysis that we put on the group that looks so spot on, and we keep telling you it's not magic. this is where we're really now beginning to lay a foundation for beginning to understand it from the ground up. So if you put today against yesterday, like I said, moving forwards on Mondays, Topper is going to be dealing with some of these practical, basical foundations. On a Sunday night, I'm going to be dealing with the philosophy behind it.
Huh?
So, for instance, what Topper has shown you today, if you go back and watch yesterday's webinar, now it begins to make sense. So he's showing you what it looks like, the signs of this market maker behavior in the market. What we're looking at on the Sundays is why the market maker is doing those things. Because, for instance, Tucker, stick with me for a second. I'm just gonna hijack the screen
Sure.
to show my screen. Just give me a second.
No problem.
Okay, someone's asked the question: how do we identify order blocks in a ranging market? Joshua, stick around for a second. We will show that, or we will address that question. Very great question. So let me see now. Let's put up my screen here. Once the computer unfreezes, you know that if you use a Mac, that ball, that spinning ball. There we go. So can you guys see my screen?
It's not come through yet.
Alrighty, it should come through now. Sonny, we will give you a whole bunch of indicators in the mentorship group. So just ask, if you ask that question in the mentorship group as we go along, we'll give you the indicators you need as we go. So can you guys see my screen now? Tucker, can you see my screen on your end?
Perfect.
Cool. So for instance, let's look at this now. This is the British pound US dollar, as we call the cable in trading. And if we were to use, so this is the 4-hour chart. So let's look at what Tope was talking about, for instance. Cool. So for instance, this is the British pound US dollar, as we call the cable in trading. Right. So if I put this here, just to show you what this looks like on a real chart now. If you look at this section of the market here, right? Would you agree with me? Guys, let me know in the comment section. Would you agree with me that this is a downward trend? In this section I've just drawn out here, that's a downward trend. Let me know if you agree. Now, this is a 4-hour chart. So this is a significant move. You know, this is not a 15-minute, 5-minute chart. This is a 4-hour chart. So it's a pretty significant move. In fact, if you look at this here, that is 480 pips, 477. So roughly 480 pips. Who would like to know how you can position yourself to make 480 pips? I would, which is why I started learning this stuff. Now, in this section is I'm going to make that this color, and I'm going to change the color for this. In fact, actually, let me see if let me do this way. Properties. And if we go for the color, if we go for none, let's see what that does. Actually, no, that doesn't help. Anyway, that's fine. So we know that section there, I'll just delineate it from here. That line, okay, I'll put that back into here. And if we put vertical lines from here all the way up to here, the market was trending downwards. The question then becomes, where's the origin? There's the origin there. If you can see this here, it's perhaps not the best example because there's a manipulation in place. All right, let's put that back. So that is the order block here, the body of this candle here. That's the bearish order block, right? Now, if you remember what we looked at, now, again, there's a manipulation here. This spikes above it, you know, and I taught you guys what happens, why that happens yesterday. There's a reason for that there. But let's just ignore that for a second. All right, let's bring Tope back in. Tope, are you free now? I can hear some noise in your background, so I put you on mute for a second.
Oh,
Yeah, I think I can hear myself through your speaker. So if you want to put your earphones in, so it won't feed back into the microphone. So that's the order block there. Again, ignore the fact that this spiked above it. Just ignore that for now. That's a manipulation. That's the order block there. Now the question becomes, why is that order block significant? So Tope has taught you what it looks like when a market maker does something. So we know from experience now that means a market maker was doing business there. Why? If you go back to yesterday, we gave the answer. They want to turn the price there, right? Now, why is that level significant? Let me take that line off for a second. If we just go back in time, let's go to a daily chart. Let's go back in time, right? If I drop a line at that exact level, see what happens in the past. You see, it was respected there. Let's put that in there so you can see it. What I mean, it was respected there. It was, 1 second. It was also respected here and here, almost there. It was respected there. Respected. No, let's put that there. There. Pretty much. Come on. Pretty much there. And there. Can you guys see that this level, when we looked at yesterday, the price respects previous price levels and certain times of the day, week, month, and year. So already, let's put this here. So before we get to that point in time, if we were just starting from here, and you can look back, you see that same level has been respected in the past. So we know this is a significant level because there are previous businesses, to use Tope as an analogy, business has been done at this level at previous times. So somebody with deep pockets sees that price as an important price. Price has been, it's been a point of origin for big move up. It's been a point of origin for big move down. And along the way up and down, it's been a point where price has stuck around for a while. So coming in there, you expect something significant to happen there. However, remember, we looked at this last night, sorry. The market maker cannot just put in an order there. They've got billions of orders or dollars of orders to fill. So on the way up into that point, they're going to start pricing in their order gradually. So they want to sell from there to you. They're going to start selling gradually along the way. And that's why as price is going up, every time price comes down a little bit, it means they've been selling. They've been unwinding their orders on the other side of the market. When they get here, if you go back and watch yesterday, when they get here, there is a sharp move away from that level. It's aggressive. If you were to drop down to an hourly chart, you'd see it even more clearly. And if we went to a 15-minute chart, it'd be staring you in the face. Let's put this in a 15-minute chart. So this is what it looks like on a 15-minute chart. They get to that level, and there is an aggressive, look at this here. There is an aggressive downward move. Takes out that level. They go back up there again, roughly into the same point. Now, ignore the fact that they spiked it there. That's beyond the scope of today. And then there's another aggressive move down that takes that out again. Right? The market structure has shifted, like Tope taught you a few weeks ago. At that point, we now know that somebody with deep pockets sees this price here as a good place to sell. Let me just highlight this that I put on while we were talking. As traders, we want to buy at a discount and sell at a premium. That's how market makers think. They're going to find the cheapest possible price to buy from and the most expensive possible price to sell from. That's how you make a profit. Now, it doesn't matter what you think is expensive or cheap. You've got $1,000 account. Even if you have $1 million account, like we looked at yesterday, you're a small fry. If a big boy in this business, somebody with billions or hundreds of billions of dollars, believes this is a premium from which they should sell, we want to see the signs that they have done so. When this happens here, we are going to change the order block. Once we see this here, we can know that, okay, the candle we're now really looking for is not necessarily that one. It is this one here. That's the body of the candle. And so when it leaves it here, it comes back in here, it starts to go south. If you look at it, because this is a 15-minute chart, we're going to see several order blocks in that region. Several order blocks in that region because it's a 15-minute chart. If it was a larger time frame, there'd probably be just one big one that covered the whole, one big one that covered the entire price range. And so if we put this here, let's see, shapes. Okay, yeah. You can see here there is another order block here. Can you see that there? There's another one there. And so usually, even if you miss this first big one, let me delete that. Even if you miss that big one there, there's another one there. The price comes back into it once, twice, a third time, and then it starts to fall away. Once you've established that that bias is moving in that direction, bear in mind, if they want to get out of the trade there, they can't just wait till price comes here and then buy. They've got to start pricing in that position gradually along the way. Like an elephant walking through your garden, you will see the footprints. And so every time you see price rally up a little bit, it means they've unwound. We call it unwinding. They've unwound a little bit of that position. Then it keeps going. They unwind a little bit again. And your job on the way down, even if you miss the beginning, we talked about bus stops, is first of all, what are the significant price levels that were hit on the way up? And so the previous highs and lows and liquidity profiles, if I were to draw some of these lines in for you, you would see them very clearly. Let's see if I can throw a few in real quick to show you that this stuff is predictable. 1 second, where am I? Okay, we're here. So let's look at how you could potentially predict where this would happen. So we're just going to draw lines at significant, basically on the other side of the market. Where do we see that significant stuff happens? So let me just drop that there. Drop another one there. Someone there. Come on. There's another one there. Now I've just thrown a few. Look, these lines are all from here. That's a low there. That's another low there. That's a consolidation there. That's a high. That's a high. That's a high. That's a consolidation. These are all before that blue line. See that, right? On the other side of the market, what happens? Well, look at how those lines are respected significantly. Can you see that? It's almost like magic, isn't it? There's one there. Let me take this red line away. Delete that. Okay, I'm gonna have to move this one a little bit so I can get rid of that one and then move it back into where that's where we picked it. So yeah, that the body of that candle there. Can you see the respect? Type in the comment section if you can see this, guys. Can you see the respect that is being had for these levels? But you will also notice something. There are new order blocks forming there on the way down. There's one there. See that there? Right? That's that candle there. So you see that candle there? The last candle that forms, the last up candle that forms before a sharp downward move. So once you see that there and you see the sharp downward move, don't chase the price. Come on, guys, type in the comment section. Let me know if you can see this. Don't chase the price. Don't get excited and start buying that TV or selling it for what you shouldn't. Just draw that line out. That's the order block. First of all, this is an hourly chart. So when this forms there, 1, 2, 3, 4, 5, 6 hours later, price goes back in. And then it drops. It comes up here. There's another order block here. See this one there? There's another order block there. It drops again. But now it goes back, blows out this one, goes back to the first one there. Right? And then drops again. It takes out market structure there, which is a sign that it's going bearish. It goes back up. And we looked at it yesterday. Why does it keep going back there? Because these guys cannot take their entire order in one go. They have too much capital. They will skew the market. And so if you look at where they took their origin from, if they don't fill their orders, they need to go back to the same Guangzhou, China factory, like Tope said, to go and restock that order. Think of it in that way. If they wanted to sell $50 billion and they could only sell 25, they are going to manipulate the market back to that area. How do they manipulate it back there? Well, by this high here. Breakout traders are going to put their stop. Well, first of all, breakout traders are going to say to themselves, if price takes out that high, it means the market has reversed. Come on. So a breakout trader is going to say to themselves, once price breaks through that, the market has reversed, I'm going to buy. And so they're going to put their buy orders above this high because that's their breakout level. Well, if a person with a huge order book wants to sell, they need to manipulate someone to buy from them. And so if they bring price back this way, the breakout traders are going to buy. Therefore, they're going to give them liquidity. They sell to them, then they drive price the other way. The second reason why that level works is for the people who got in here. And that's why if you miss a move from the beginning, be very careful about staying in too long. Protect your profits along the way, because they're going to come back and clean out some of the intermediate order blocks to generate more liquidity. So if you got in here, you're selling. If you sold, then your stop loss is going to be a buy. If you open the trade by a sell, to close the trade, you need to do the reverse. So your stop loss is going to be a buy. You're going to put your stop loss above this high. That's what you were taught as a retail trader. So they know that when price is going down here, there are people who've put their buy stop loss there, but they want to drive price further down. Look, they're not satisfied with ending here. But at this point, nobody wants to buy from them anymore. They can't sell any longer because price is now too cheap to sell. They need to engineer a premium. And so they're going to bring this price back above that level there. There'll be stop losses there that will trigger their orders. There'll also be breakout traders. In essence, they've triggered buy liquidity so they can sell to you. But where does it go? Once it cleans out that liquidity profile, it goes back into that former order block, and then it goes down again. And this is how price works. In fact, what I've just shown you here in this section here, let me put this is my personal. I don't know about Tope. You can let me know if this is yours. But this is my primary money setup. When you guys see me post those trades on the group and wow, this is so spectacular. I've got, I have about 10 different trading setups that I teach. I have 2 that I trade, maybe 3 maximum. I can teach you several, but like I taught you guys last year, for those of you who were here last year in the group, you need to find the ones that go well with you.
True.
The ones that when you see, your brain picks up on them real quick and that you're comfortable with, and you get that with experience. This is one of my primary 2 setups that my brain just spots quickly. So I have seen a market maker reversal up here, right? Let me put this here. So I've seen a market maker reversal up here, right? It has broken structure on a significant time frame. If I go to 4-hour chart, you will see that on a 4-hour chart, I'm going to take the lines away so the chart becomes less cloggy, but you know what those lines are for now. I call them my magic lines. I'll take this away as well so I can show you this. So if you look at this here, price has broken market structure at that level. I'm going to put that in purple because purple is my 4-hour chart level. So price has broken market structure to the south side on the 4-hour chart there. That's okay. You want me to zoom in, Tope? All right. Right. Okay, is that clear?
Better.
In which case, let me redraw that line. So price breaks market structure there, right? That's sign 1. Secondly, to break market structure there, it does a 4-hour stop hunt. It takes out that 4-hour high, cleans out the liquidity in that area, and then it breaks market structure to the south side. I'm showing you my personal bread and butter setup to explain to you what Tope just taught you about order blocks, right? You can go into your chart tonight and start to pick out trades for tomorrow using this. It then returns above that market structure and cleans it out. You see now, so for me, this area, I am not doing anything here. I'm just watching. Let me take that away. In this area here, I'm just watching. It's showing my setup. It took out a 4-hour high, did a stop hunt, and then broke market structure to the south side. So that was a manipulation. It comes back into that area and it dies. That's just my word I use. It dies. It falls out of bed. It cannot go back any further. Also, if you look at it on a daily chart, there is a daily engulfing here. When I keep shouting about my daily engulfings, you see this here? Price is going sharply one way, and then there is a sharp daily engulfing the other way. So this entire area for me now, I'm going to clean these out. Okay, so let me put this in a different color so you know what I'm talking about. This entire area for me now tells me I have a bias. I have my daily engulfing, I have my 4-hour stop hunt and market structure break to the south side. I now know that for the next few days, I'm only looking at selling. I'm not interested in any bullish trades. I know I can scalp the market bullish. I know I can make 20, 30 pips on the bullish side. I do not care. I am busy. I have a wife. I have children. I have other businesses. Does that make sense? I'm a community leader. I'm not going to be sitting in front of my chart every day. That's not how I trade. I don't like to give myself high BP. I'm not an addict. I want to come in, be precise, accurate, get my money and move. And so once that happens, I know I'm looking south. Now the question is, where do I find the trade? That's what Tope just taught you. So at that point, this is now the area you're looking at. You are now looking at the area in between the 4-hour high that was taken out in the inverse stop hunt south. I know that any trading opportunity I'm going to get is going to be from this line downwards. If price comes back up into this area, well, it could work, but I'm a bit worried. So if it breaks back above this area again and spends too much time there, if it breaks back here and then shorts, that's fine. But if it breaks back up here and spends a day or two, then I'm like, okay, this is not going to work. But this is textbook. It stays there and it dies. The question then becomes, where's the entry? Well, I drop down to a 15-minute or 1-hour chart. Either will work. And I start to hunt the entry. At this level here, you can see, and you see this all the time, guys. If you go back in your charts and you look for this, you will scream. Like Tope said, once you see this, you cannot unsee it. You see this time and time again. An order block will form in this area. Somewhere between here, within that top line, right, and the bottom line, in that region, somewhere in that region, you will see an order block. Watch that order block. So this is the one that forms here. Now, there's several types of order blocks. You know, Tope is just giving you the basic ones. For instance, we'll show you in weeks to come that this here is itself a kind of order block. That rejection area there at the top there is a different kind of order block, because if you go back and look at that in a 15-minute chart, let's look in a 15-minute chart, you will see that that area there that looked just like a rejection on the 1-hour chart. Let's see if I can find this. It looked just like a rejection on the 1-hour chart. On a 15-minute chart should actually be, there you go, a textbook order block, and further down. Anyway, so you're looking for another block that forms in that level. That's the one there. Let's use the traditional order block. That's the one there, right? To be on the safe side, I would extend this all the way to the top of that candle. Now, I am looking for price to come back to that level. I have two opportunities to do it. The first one is here in the same day. In the same day, it comes back here. However, we've taught you about time of day, right? That is 3 p.m. in the afternoon. This is 5 p.m. Cyprus time, so 3 p.m. UK time. I'm going to be very wary about that because it's just on the boundary of the time zone we say to follow. But you could have gotten in there, taken a nice ride. But because I understand how market makers work, this is what I'm waiting for. I'm waiting for a short-term high to be engineered. In essence, they're pricing in their order. A short-term high to be engineered there that tricks retail traders into putting their stops above there, or breakout traders into seeing that as a breakout level. I know that this here is the order block that they are still respecting. This here is the other block they're still respecting. That's the one that formed in that area, right? And this for me is bread and butter. It's rinse and repeat all day, all year long. And so I'm going to put this here for you. I've shared this with a couple of you in private sessions in the past. I don't know if there's anybody on the webinar tonight who's on a private session with me over a year ago. But if so, then this should look familiar. I'm going to number it. So that's one. That's my short-term 4-hour high forming, the way I trade. That tells me, so every time a 4-hour high forms, I watch it closely. If price just keeps going up, I delete it and move on. However, if I then see this, 2, price is engineered above that high, and then 3, there is a market structure break to the south side. That would be here. My mouse is just misbehaving a little bit. I think I need to change my battery. Now, this is when I know I'm in business. 4-hour high taken out. Stop raid. A price breaks market structure to the opposite side. That tells me there's a trade to be had. However, you have to be patient. This trade here forms this week, the week of the 10th of June. Right? So the day, sorry, so the 11th of June. This is triggered on the 11th of June. My entry is 1, 2, 3 days later. Can you guys see that? In essence, my setup, and of course, I'm also waiting for the bullish engulfing on the daily chart. So that would be, let me see, what day did the daily engulfing happen? It happened on the, no, were we working? No, we're working here. Yeah, it happened on the 11th. Cool. So I go back to 1-hour chart. 11th is here. Right. So I'm going to put 4, which is my bullish engulfing. Just put that there. 11th. So I'm going to put 4. And the 4 is bullish engulfing. So by the 11th of June, I now know that I have a trade that is going to give me a 70% chance of success. If you see this happen, the chances of success are 70% and above. And even if you don't want to study how to trade correctly, just go through your charts and wait for this to happen every single time. Now, if you don't understand the underlying information, you'll get it wrong half the time. But you can just go through your chart and check this out 1, 2, 3, 4 all the time, right? Once it happens, remember, I am looking for an order block that forms in this region. Let me show that to you again. See this region here in between these two lines? I'm looking for an order block that forms somewhere near that. Now, there's actually one here. If you look at this one here, there's actually an order block there that starts this move. So you see this one forms here and it starts the move. But let's ignore that. Let's assume you didn't see that clearly because that started before 4 happened. So that's a hindsight order block. We can't trade in hindsight. Many people who teach on the internet teach you stuff from hindsight. The question is, can you see it in real time? It doesn't matter if you can look back and say, oh, yes, that's where I should have gotten in. That's of no use to you. What's of use is, can you see this thing unfold in real time? And so I'm going to take that. So that's the area in which, like I said, we are looking to find a parent order block. So let me take that away now. And so once 4 happens, I go back up and I tell myself this order block here. It could also be this one. Either of these two would work. So this one would work, that one would work. But this one is really nice because it's the rejection line from the market structure break. It's the confirmation that a market maker thinks this is a premium price to sell. I wait for a short-term high along the way. Don't try and be cute. It should be something obvious. Because the market maker is waiting for retail traders to see it and respond. So don't try and be cute and take something very obscure. Look for an obvious one. This is the obvious one here. Now, the problem with trading this way is price could have just continued going south and you'd have missed out on the move. That's fine. There'll be another move next week or in another pair tomorrow. You got to be comfortable saying, I'm not taking that trade till it meets my criteria. This short-term order block forms, and then they engineer the liquidity. So this is 5. Put that there. That's 5. That's the short-term order block. Or short-term high or low, I should say, actually. And then 6 is they come back and clean it out. They come back and they take out that high. But what are they doing? They're running it back into the parent order block. Can you see that there? They're coming back to that order block. This is what really drove this move right here. Now, I want to ask you a question. Oh, I haven't put this indicator on this chart. Let's see. Insert. No, I'd have to close it down. That's fine. So I want to ask you a question. If I took a trade from here, from this point here, and I put my stop loss above this order block there, that would have been 40 pips. Let's see how many pips I could have made over the next few days. So I would have entered the trade on the 16th of June, right? And over the next so in 1 day, 2 days, 3 days, 4 days, look at how much money I could have made. Enter there, 40 pip stop loss, 340 pip profit. Let me show you this on my other, because I have an indicator on this platform that I don't have on the other one. So let's go back and find that here. So that was this move, 16th of June, right? That was this move here. So this was the order block here, right? And this was the move. Please look at this, ladies and gents, for me. 1 second. Control M. Right? Please look at this for me. If I enter the market there and I put my stop loss there, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to 1, and we still haven't gotten to the bottom of the move. But you don't need to be greedy. 9 to 1 or 9.5 to 1 would get you back to that original low there. Just get out there. Look at this. That's actually 10. Actually, that's more than 10 to 1. Look, this is a 10 to 1 trade. Sonny, are you still there? Can you see that? That's a 10 to 1 trade in 2 days. So 3 days, 1, 2, 3. But you have to be patient. You started tracking the market from here, right? 1 day, 2 days, 3 days of inactivity. The 4th day, the magic starts to happen. Let's look at the time of the day this move happened. Look at this, right? That's 8 a.m. server time. So that would be 6 a.m. UK time. Remember we taught you Tuesday, Wednesday, Thursday, you should be at your charts 6 a.m. to 10 a.m. in the morning. So 6 to 9 a.m. in the morning and 12 noon to 3 p.m. in the afternoon, London time. Look, if you miss the 6 a.m. move, fine. It gives you another chance at 2 p.m. in the afternoon. That's 4 p.m. That's so 1 p.m. in the afternoon, right? Give you 2 chances that day, one in London, one in New York, and off to the races we go. The order block there. It's what's driving the market. It's not a stochastic, an RSI. It's not a trend line break. Now, somebody will say, oh, now let me show you the fallacy behind it. Somebody would say, well, this was a trend line, right? This will be the trend line, right? Look at this, guys. Put that in blue because that's blue is my 1 hour color. And the trend line broke, right? It broke here, then it retested and it came down. No, that is not what happened. And if you were trading the trend line break, you missed out the move already. But it was not the trend line break that drove it. The trend line break is an amateur way of seeing what has already happened after it has happened. What drove it was a 4 hour stop hunt, a market structure break, a daily engulfing, right? An order block formed at that level, an intermediate liquidity engineered, price returning to the parent order block. And so, for those of you who've watched the video on the CMERT, let me put that in real quick as we bring this to an end. We have here, this is how the markets work, guys. This is what really drives the markets. We have here, right, a consolidation. See this? So that's the C. Consolidation. We have a manipulation. A manipulation. Then we have an expansion. So that's the consolidation there. The manipulation is price wicking above it. Then we have an expansion, meaning the real direction price wants to go. So this is the expansion. All the way to down here is the expansion. This is all on this channel. You can go watch this already on the channel. This is an expansion. And then we're going to have a retracement. Where is the retracement going to come to? To that area there, right? That's the retracement. That will usually take out an intermediate high or low. And it is at that retracement that I personally will now enter the trade and ride it to my target. Trend lines be damned. Does that make sense? There's a consolidation, there's a manipulation, stop hunt, then an expansion in the right direction, takes out market structure break, the daily engulfing. That tells us, okay, price is going south. You wait for a retracement, take out an intermediate liquidity profile, back into a parent order block. That one there. It could have come up to here. So the truth of the matter is, we'll talk to you about how to pick order blocks later on. It could. So how do I know it could have come up to there? That would have been valid. But when I see this here, intraday, when it respects that one, and then it takes out that market structure there, that tells me there's a very low chance it's going to go up to this one because it's respected this one already. So it usually give you one more chance because, like I said, the elephant cannot hide the fact it's been in your garden. It needs to give you clues. An elephant can run through your garden a lot, yet you know it was there. It will. They don't want you to see it, but they have no choice. Their orders are that significant that they show up on the chart. And so this is the point at which you should have been in. At this point here, you know it's not coming all the way back there. So you get in there again. And with confidence, you put your stop loss either above the body of the candle, but even if you put it at the top of the high, that's still fine. Even if you were very cautious, that's still fine. In how many days? In 3 days, you get 1%, 2%, 3%. So if you risk 1% of your account, like we teach you to, 1%, 2%, 3%, 4%, 5, 6, 7, 8, 9, and almost 10. And remember, to be profitable, you need a minimum of a 3-to-1 risk to reward ratio. That's it. 4, we advise you to go for 4, but minimum of 3. So if you took 4% on this trade, 1, 2, 3, 4, you're out here, right? On this account, you risk $83, you get 335. That's it. By the time you get, me personally, this is the way I trade. By the time I get to this level, I'm out. Look at this. By the time I cross that and I see price to consolidate there, I'm just going to come out here. I don't care about the rest of this. I've already gotten 1, 2, 3, 4, 5, 6%, maybe even 7, 6.5. By the time it comes back up to here, 6, I am Audi. I'm taking my 6%. I'm calling Tope. We're planning drinks, non-alcoholic. I'm taking my wife for dinner. That's it. Rinse, repeat. Do you guys think you can do this week? On whatever pair you're trading, look for this. Take 3 or 4 pairs, put in the group. Oh, I've seen the 4-hour stop hunt. I've seen the daily engulfing. I'm waiting for this. We'll correct you in the WhatsApp group and say, no, that's the wrong one. That's the right one. And start picking out your trades this way. Tope, is there anything you want to add?
Everything looks amazing. It looks and sounds amazing.
So, Tope, is there anything you're looking at for this week? We've got 10 more minutes to go. Any charts, any pairs that you are stalking this week that you want to show us?
It's is USDCHF. That's what I'm looking at this week.
Let me give you want to share you let me if you share your screen again, I'll give you control of the screen share.
Okay, 2 seconds.
Guys, any question? While Tope sharing his screen. And Joshua, have I answered your question about how to identify order blocks in a ranging market? Because I think that I gave you that one here. Let me put this back there. The fact that so the market's ranging here, right? But I told you that this is the first one, and then this one, how you spot. So you're looking for the order blocks at certain levels, not just any kind of order block. You want it to form at a previous price point. Like I gave you an example. If I drew a line here, just look at this line. So this line was formed there. Shape, rectangle. So that line was previously respected there, right? And therefore, also, this is the market structure break level there. When I put those two in confluence and an order block forms in that area of the market, I know it's going to be a significant one. Does that make sense, Josh? So it's not just the fact that it appears anywhere, that you'll see several other blocks on your charts. The questions are, which ones appear in certain areas of the market that you're already interested in after certain things have happened? Also, I haven't done this yet, but let me just throw a Fibonacci and see. I can almost bet that if we put that there, so from that level to that level, bang, can you see? This is in between. Actually, that Fibonacci is wrong. That says 71.8. I made that mistake yesterday. It should say 78.6. 786. 78.6. So look at the magic. You have a previous magic line, like I call them, a previous price level, right? You have your bearish bias having formed, that being the confirmation level of the bias, right? And then the order block forms in that region around that market structure break level, around that previous price level point, in and in between your 61.8 to your 78.6. This is a 90% trade. In essence, 9 times out of 10, this trade works. And it's the order block that is the principle behind it. But you have to understand the background behind that. Talk over to you. Let me give you control of the screen. Right. So if you want to put your screen up.
Okay.
And I'm going to mute myself.
Okay, just a quick one. Um, I don't know who asked the question about arranging condition, how to find the order blocks in there. I think USDCHF would be a very good one. It was ranging for a while. Let me put the dividers back on. So if you look at this last month, you can tell, it didn't go past. Oh, where is it? Okay, price didn't go past this high and this low for a while. Okay, so it was ranging, and it's very simple. All you have to do is to look back and say, okay, what caused this drive down and what caused that move up? So from here, we can see this red, big, huge candle here holding price up for a significant period of time. And then for the top, we are just going to be looking at this candle mainly, but I like to, let me drop to a lower time frame, I think. Let's see a better one there. So this bearish order block there held price in that range. Price has not been able to go past that level for a significant amount of period of time. So you can see it just bouncing off, trading off. So that's a ranging condition, and this is how to just simply identify it. As I moved, the reason why I moved to a lower time frame and not just stay on the daily is because if I wanted to take the daily, I would have to take all this huge candle here, and it will look too it's gonna look too dirty. But that's still the concept it applies. That's the biggest bearish order block there. But if we go into the 4 hour time frame, we'll be able to see a smaller, more precise level, which is this H4 marked over here. So my idea for USDCHF comes from this nice stop point over here. You can see. I remember from the other session that we thought we said a stop point is not complete until a market structure break happens. So price stop on H4 stop on this previous H4 high. Okay, and then price came down, broke structure at this level. Let me take this out. So now look at this green candle. Remember, this green candle was a daily order block that we drew. It was a daily bullish order block that we drew. It's been broken. So they're also trying to tell us as well that, okay, all the buying orders, the buying strength here is now canceled out because of this move down that went past the market structure within that area and also closed below that former demand or former bullish order block. Now that area is been destroyed. Like Israel said, prices died. Okay. And then what we then want to do, just typical same exact same thing, want to do. Okay. Prices broken market structure in that area. Do we have any sort of reason to enter into the trade? Do we have a supply zone in there to come back and trade? We got one there and we've got another one over here. Okay, we'll wrap it up all the way to the top there. So what would then wait for would be for price to get to these levels and trade. But at the same time, this black line that I drew here, so USDCHF is in a serious, sort of ranging condition. But if you look left, you can see this H4 low, and it's also a weak low. Okay, that's a week in March. Okay, and to also marry that level, there's also a bullish order block at that level as well. Okay, so now the market is in two minds. It is stop hunted, is rallied up, it is broke. Well, I'm not too happy about the structure because it doesn't look too strong for me. But the reason why I will also take this structure broken was because there was a huge reaction down from it. So there's something significant happening in here in this three candle area. Let me zoom in a little bit. So there's some sort of structure broken over here. Okay. And as that structure break happened, price retraced back. So you had your so price retraced back, and we're looking for it to come into an origin here. So I'll also be looking for price action at this point. If price comes down, which is looking like it is doing now, is coming down here, I'll be more than happy to take this trade. And also because it's going to be going below last week's low as well. It should be going so that means it's doing a double stop hunt. So this level here was a stop on into a bullish order block from the 17th of March. Okay, now it's going to do another one, most likely. Drop into this new bullish order block form that has already formed. If you look left, this will be another good trade long, which will marry nicely with the trade short that Israel was giving you. And this is also tallying with something, a concept called market correlation. Okay, so a weakening in pound should be a strength in the dollar. So USDCHF is also a good indicator of strength in the US dollar. So if price does this tomorrow Tuesday, maybe Wednesday, but I think tomorrow I should be able to do this. Drop into this level, taking out last week's low into this order block, bullish order block. It's a beautiful buy scenario. It will be a beautiful buy scenario. And to come back at least to this level here. Okay, to this level here. I feel this level is too clean. There'll be a lot of stops resting on. Definitely, definitely. This will be a very, very good TP for long. The reason for that is there's a double top here. Look at this red candle and this spike up, exact same point. What did retailers do? Retailers will be putting all their stop losses there. Price will rally up, most likely come into this area before we see another reaction down. So that's my analysis on USDCHF. That's what I'm watching. That's what I'm looking out for the next couple of days. Okay.
Awesome. Can you guys hear? Tope, can you hear my voice?
Yes, loud and clear.
Awesome, 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 awesome. Because of time, I was going to show you guys something in EU, but I don't think I have the time to show that. But think about this: EU is inversely correlated, and GU, both of them, are inversely correlated to the Swissy.
Yeah.
So if the dollar is going up, the dollar Swissy goes up. But if the dollar goes up, then the reverse or the inverse should happen. 1 second. Oh, I'm showing the wrong chart. Let's take that off my screen. Y'all don't need to see my WhatsApp. Right. Let's see. Aha. So the exact same thing should be happening, right? If Tope is right, I don't have time to show you the dollar index tonight. But if Tope is right that the Swissy should go up, then we expect EU and the pound to go down. Now, this could be wrong. It may not happen, but if it does happen, well, look at what we have here. It's like a 4-hour chart again. Let me zoom in a little bit. So look at the same principles here, right? So I'm going to just number them out real quick for you. Just real quick. insert test. So remember my numbering system, that's 1. That's the 4-hour high that formed. That's 2. Stop hunt. They cleaned it out. And then remember I said I'm looking for market structure break on the 4-hour chart. So that would be 3. Market structure has broken. Hey, Glenn, good to see you, man. And then remember I said I'm looking for an order block that forms in this region, right? Can you see this here? This is after 3. So in this region here, this is a trick. You will not find this in anybody's mentorship, anybody's book. I didn't get this from anybody. This is something I spotted myself after years studying the market. Once this happens, stock that region. That's usually where you're going to get your business. And so here we have this order block here. This one here. I'm going to take that. To be on the, well, actually, we could do that. But to be on the safe side, I'm going to stock that entire region. And then I will drop down into a lower time frame. Let me put that in Sandy Brown. So I'm going to drop down to a lower time frame to refine my level. So there we go. So here in this lower time frame, I'm going to refine it to, I'm going to take that level there, right? But it could be anywhere up down to here, but I'm going to refine it to there for now. Now I'm looking for an intermediate low, an intermediate high, sorry. This one's been taken out already, so it could run into this. So now I have a couple of options here. If you look at this here, this would satisfy me because that's a high, that's a high. It's taking them out. So this would be my 4. This would be my 4. Right? I'm now looking for my 5. My 5 is my intermediate high. This is 1. This is another. Come on. Just going to draw a new one. MetaTrader does this sometimes. This is another one here. And so if something happens in here tomorrow, that will be valid. But I'm just suspicious. Call me, I am just very, very, very suspicious. A part of me just thinks somehow that it's going to be this one here. I may be wrong. If I'm wrong, that's fine. Because this is the beauty about understanding how to trade. Even if you're wrong, because you understand the principles, if it respects this one here, I know what to do to get on board it. But I'm going to wait for this one because I think this one has a high chance of happening. If I'm wrong, that's fine. I can still make money from it. So this will be my 5. Now, if that's my 5, let's go back to the 4-hour chart. If that's my 5 there, let me just put this here since we're in the 4-hour chart to make it obvious what I'm doing. If that's my 5 there, then my play for the week is going to be the exact opposite on EU as Tope is on Swissy. And they line up. If the Swissy is going up, you expect the EU to go down if it's the dollar driving both of them. Except there's something special happening in the euro and the Swiss separately. And so I'm looking for this to come back here. Somewhere in that region there. Just going to draw a line there. Now, I want to see, is there, okay, boom, there we go. See, notice I drew the line first before I went back to check. Can you see that this daily candle here respected the middle of that order block perfectly? Can you guys see that there? Now, it doesn't have to go all the way up there. I'm just giving myself reasons to agree with my analysis already. But somewhere in that order block region, I'd be interested to see something happening. It could come all the way back to this original level. If it does come back here, I'm going to be very careful to see what's going on. But if I see a nice reaction there, and maybe a double reaction, meaning it comes out a little bit, breaks, say, a 15-minute or 1 hour market structure, goes back, then I'm going to be in. And so I'm going to look from there and coming back down. Let me see now. Coming back down, I got a couple of potential spots to come out. I'll show you them real quick. Again, these are all liquidity profiles. This is one of them here. That's a place I think price would respect a little bit. If it breaks through there, then I'm looking at this here, because this is the market structure break that drove the move going upwards. It's already been respected. It's already, see here. It's been visited once already. So price has come back in there once already, but there's a good chance it may want to come back in there again. And so my first exit point would be here. My second, if it breaks through, I'll probably get out here, wait for it to break through that level. It'd probably come back. So this is probably what it would do. It may do something like this. It'll come down, just break through it just a little bit, then go back into it, either into here, or it could come all the way back into here, into this region here. And it may, again, what is may, not will, it may then finish that journey down there. Again, these are just trade ideas, right? They don't have to happen this way for us to make money this week. We know what we're looking for, or we know what to look to see that our idea was wrong. So we're not married to the idea, but this is how you should trade. Go into the week or the day or the month looking for something to happen. Don't just react as it happens in real time. You have a trade idea, you get set to go. If your plan unfolds the way you think it will, then you're happy and you go. Right? Now, if that were to work, let's drop down to 1 hour chart. If that were to pan out, we would be talking about, again, on a 1 hour chart, I would refine that quite heavily. I would refine that to there on a 1 hour chart. If I was trading, taking my trade on a 1 hour chart. So that would then come up there. And this would come up there. So we're talking about a stop loss potentially of 25 pips. That's usually the maximum stop loss that I take on my intraday or intra-week trades. 25 pips. We're looking at the first target of 175. Just think about that. 25. What's 25 divided by 175? Let me see. 75 divided by 25. 7. So that's 7 to 1 potentially on offer on that first leg alone, right? However, if it gets down to the second leg, which it could, that would then be, let me see. So it's 175 here to this level here, which is probably where it may end up dying. That's 230, but potentially could come up all the way to 300 pips. So we could see an over 10-1 trade in just 2 weeks, but at minimum a 7-1. Alternatively, price could just take out this level, then take out that level, and take out that level. So if I don't see a reaction I like here, I don't do anything. If I don't see one there, I don't do anything, because you could argue this is the intermediate high and it's coming back into the consolidation. The moment it gets to the consolidation, I'm out. I am not taking the trade until I see 1, 2, 3, 4, 5, 6 happen again on this particular pair. So under that, this would be my 6. This would then be my 6. And you can see the whole thing if you want to look at it that way. You can see a consolidation. Sorry, this will be the consolidation here, a manipulation, an expansion, a retracement, target. Sorry, consolidation, here, manipulation, expansion, retracement, target. All right, guys, any questions? I think we're going to call it a day there. It's been almost exactly 2 hours. So go through your charts, map out these things. My advice is every month, at the start of a month, do some analysis and pick no more than 4 pairs you're going to look at that month. I picked 2, but I know many of you love to trade. I don't love to trade. I just like to make money. I'm just being honest with you. I'm not trading for the fun of it anymore. That went a long time ago. I now trade because I have something to do, because I enjoy the rest of my life. I don't need trading as a hobby. But if you still in the phase where you enjoy trading for the sake of it, you just like the buzz, pick out 4 pairs, do your analysis at the start of the month, and track those 4 through the month. Do your 1, 2, 3, 4, 5, 6, your CMERTs, go into the week with these kinds of plans, put them in the groups. We'll assess them for you and let you know what we think about them. Good luck. Have a great week trading. Talk about anything you want to say quickly before we go.
Nothing more. It's been a very, very good session. Really appreciate having you guys. Yeah.
Same here. All right, guys. Take care. Go kill the markets this week. Bye-bye.
Bye.